Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to this week's edition of the Business Talk with Ajay right here on ITV Gold. This weekly show brings you the in-depth of any business that you really need to know what the business is all about, what are the pros and the cons of the businesses, and how business should be operated to make money. And in case a business owner makes certain mistakes, business also can be a failure, and what should you do to make sure that business does not go into the failure category. So these are the things we discuss in the show called the Business Talk with Ajay, and the show is brought to you by CPA Services, a full-fledged professional accounting firm located in the state of New Jersey, multiple locations, but they can assist you wherever you are in the United States of America for tax filing, corporate or personal, to any bookkeeping, payroll, any matter, or even for that investment advice. They can guide you in the right direction. Their on-hand experienced and trained CPAs will take upon any matter to make sure that your problem is solved. You can give them a call at 908-380-6876 to book an appointment in person, over the phone, over the Zoom. Everything is possible with CPA Services. Their website is cpaservices.com. With that note, I'd like to welcome Mr. Ajay Kumar, CPA and MBA with CPA Services for almost 30 years of experience, who knows inside out of taxes and any business related matter, joins us every week and gives us all the information that we really need to know. Ajay, welcome to the show. How are you?
Thank you, Sanjeevji. I appreciate the kind introduction. Thank you.
Sure, very welcome, because that's what true. This is what CPA Service is all about, as I know it for a number of years, and I strongly suggest the viewers that you should also consider going to CPA Services for your tax matters or any matter, and also, I request your friends and family members, if they are looking for a professional CPA, CPA Services should be one full stop for you. With that note, let's go ahead and let's move on with the show. And today's show's topic is import and export. यहाँ से लाओ और यहीं पे भेजो. Now, what does import and export business is all about? That's interesting, Ajay. I remember in the 90s, this import-export business was booming. They were importing so many things from India here, and I'm talking, obviously viewers, I should mention one thing. The show is just keeping South Asians business owners in the mind, because mainly what businesses they are in, that's what we feature, those categories. So import export was so popular, many businesses were in importing from textile to gift items to food items and whatnot.
Absolutely.
So now let's get into more detail on this import export.
So if you take a step back, we live in this country of consumer, country of consumption. This country, United States of America, has probably the whole system, the economy dependent on the import. Everything is imported over here. It's not as much export, it's more of an import type of situation, but as you rightly pointed out, Sanjeevji, right from the gift items, food items, right from jewelry to anything minimal. Plastic boxes are imported from China. A lot of these things are imported from third world countries, India, Bangladesh, China, Japan. Depending on, you look around, everything is imported from somewhere. So understanding this business model, understanding the caveats of this business model is extremely important. In this country, the easiest way to be successful, if you buy something locally from here, and I'll give you an example. A lot of people, a lot of retail store buy from Dollar General, dollar stores. A lot of retail stores buy from Walmart, and then they sell it at a convenience store. That's also buying and selling, buying something locally, selling over here at a slightly higher price. But when we are talking about import and export, we are typically talking about from a different country, from India. Let's take an example of India. Aluminium is imported from aluminum. When we talk about export, I mean, I'm not saying the used product, let's say the car, the vehicles, when they are used up, the metal scrap, we call it, is exported from this country to India. So understanding the rules, the regulations, the tariffs, the legal compliances that we have around this import-export business can make or break your business.
All right, so basically you just started to talk about unique characteristics about import and export because tariff is number one issue comes in, right? So now let's go to a legal and a regulatory compliance matter.
Absolutely. So when you have an import-export business, you have to be concerned about the industry. Which industry you have this import coming from? Let's say, take an example, food industry. If you're importing something that can be eaten, a food substitute, a vitamin, more than likely you have FDA exposure, Food and Drug Administration exposure. If you are bringing some medicine, you have to be worrying about that exposure. So depending on the category you are importing in this country, if you are importing aluminum, as you are saying, there is a tariff, and there is a special legal compliance around it. So there are certain protected items, protected products that this country want to limit the import. We don't want unlimited import of that item in this country. So in order to track how much is import, which we either try to put a tariff around it, so we remain competent, the local businesses are competent, they can sell it in the industry, or we try to increase the legal compliance to make sure the people are providing the right product, right quality. So when we look at the tariffs and legal compliances, there are two different objectives around it. The tariffs are typically put on to gain some extra revenue for the government, where we are making sure people are not selling something cheaper. Let's say if the local producer is selling something for $1 and you import it for 50 cents and you try to sell it for 70 cents, then this local producer will be out of business soon enough. And in that case, once this local producer is out, you can start selling the same thing for $2 because there is no competition around it. So government doesn't want to eliminate the local competition. That's why they try to put in the tariff to make sure your product in the market is high enough so the local producer can compete. The legal compliance is typically not about protecting the local producer. The legal compliance is more about what you're selling is of the right quality. If you are saying something, this is the benefit or this is what you're selling, you're actually selling what you're saying you are selling. That's where the legal compliance kicks in.
Okay, so that's interesting, good to know, because that's also one of the important unique characteristics. So after tariff and then of course legal matter comes in. Now moving forward, what about logistics and requirements for this import-export business?
Absolutely. So it's not as easy to buy from the next door. You have a lot of logistical requirement. How would you get this stuff? Is it coming through air? Is it air shipped? Is it coming through sea? Is it water shipped? If it's water shipped, then which channel, which canal is it coming through? How long is going to take for this item, this material to come over here? And in the long run, depending on the quantity you have, more than likely you will have the water shipment as opposed to the air shipment. Air shipment can be probably 20 times more expensive than water shipment. It saves you time. What you can get in 3 days can take 6 weeks through the water shipment. But again, there is a cost factor to it. If you are getting the water shipment, you have to make sure the item remains good for n number of days, because it can take 6 weeks to 8 weeks. Then you have to look at the funding as well. When you are looking at this business cycle, for something to sell to the stores, you have to have 3 times of the inventory. Meaning, if you are selling to, let's say, Walmart, Costco, ShopRite, you have to have enough inventory over here in your warehouse for at least 4 weeks. You need 4 weeks of inventory on the water because it's not something that you can replace tomorrow. Then you want 4 weeks worth of inventory at the supplier's warehouse. So typically the cost that you have involved in the business startup is much higher when you are looking at the import-export business as opposed to local business.
Very good, interesting. Now let's quickly move on and see if you can just comprise these 3 categories in a very short form before we go into the break. One is that I'm sure with the import-export, language and cultural barriers comes in effect. Then the second issue, which I think one of the main important one, is the currency fluctuations, and if there is any economic instability regarding this import-export business. So quickly, if you can just highlight those three
Absolutely.
issues.
So the last one is an easy one. When we are talking about the regional conflicts, we are talking about Russia, we are talking about Ukraine, we are talking about Iran, we are talking about a lot of these countries not working hand in hand. So you have to be concerned about it, where the shipment is going to come from, and if there are any hurdles around it. When we talk about currency fluctuation, you have to really see how the market is doing. So it's not just the local market. If your suppliers market is not doing well, if the government is changing in India, your prices may change for that country, your currency will fluctuate. So the same thing that you thought is going to cost $1 is now costing $0.10 because the currency has become stronger in a foreign country. So you have to be concerned about a lot of geopolitical factors. You have to be concerned about the economic factors when we are talking about the currency fluctuation. In many cases, you can hedge against the currency fluctuation. You can buy buy insurance against the currency fluctuation if you have large enough volume. But again, there's a cost to hedging, cost to this insurance. So you have to have large enough business to go into hedging the currency fluctuation. So it's a business that you have to be focusing on. You have to know exactly what you're walking in, what you're getting in, before you try the business. I mean, if you are just doing it on the side, buying some Indian clothes, women clothes, or artificial jewelry, just to try it out, that's different. You can get this thing done and then sell it on the fairs. That's really not import-export business. But if you go full-fledged in this business, if you are really serious about this business, there is more than how do you sell to this business. There is a lot of money involved in this business, more than what you would typically have when you are having a local business. So just be aware of all these factors.
Okay, these are important things, obviously, for import-export business, and it's as much as sounds really, really good. Obviously, there are also going to be things that one should really watch out for. We're going to go into the break, and when we come back after these messages, Ajay is going to tell us how to start import and export business. That's coming up right after these messages.
Absolutely.
Welcome back to the second half of the Business Talk with Ajay. In case if you have just joined us, today's topic is import and export. Right before the break, Ajay explained to us unique characteristics about import and export business. Many of you are in the business, or you may know your friends, family members are in this business, and it's really good to know what this business is all about. Once again, the show is brought to you by CPA Services, a professional accounting firm located in the state of New Jersey in multiple locations, but they can assist you any tax related or for that purpose any business related matter. They can be reached at 908-380-6876. With that note, let's continue. How to start an import and export business?
So take a step back, see what's your passion. What are you importing? What are you trying to sell? And why are you special? What unique proposition you are bringing? Everybody wants to be millionaire, but how? Everybody wants to sell the women clothes, but what's your expertise? Do you have the parents in the family in India in this business? Do you have a special skill set that sets you apart, that brings highlight to your business? So first of all, identify what business, what product you are importing. You don't have to be importing tons of product. You can make a lot of money with a straw if you have the right idea. You can make a lot of money with the women clothing, artificial jewelry, but identify why you, what strength do you have. Once you have identified the product that you want to import, find out the suppliers. How would you get the supply? Find out how would you sell it. Do you want to sell it through Amazon, eBay, all these online portals? Or do you want to sell it locally? If you want to sell locally, where would you have the merchandise saved? If you are selling it through Amazon, you can have Amazon warehouse used. But if you are selling it to the local stores, you probably, depending on the item, you probably have to have a warehouse. Do you need a weatherproof warehouse? Let's say, for example, if you are bringing perfumes from India, you can't really be using the regular warehouse. with the heat, with the cold, you have to have a weatherproof warehouse, spatial warehousing. So make sure you understand the item, the unique characteristics of that item, unique requirements for storing, for importing, for selling that particular item. Once you have that situation figured out, who's my supplier, who is my buyer, what are the logistics around it, how would I buy, how would I get the shipment over here, how would I sell, how would I be saving the shipment while it's here, then you start considering forming the LLC, S Corp, C Corp, depending on who the partners are, depending on if you have the Indian supplier, Indian investor, a foreign person investing money into your business, you may have to have an LLC or C Corp, depending on what other businesses you have, what other income you have. S Corp may be the right. But before you go there, before you start the business, first you figure out why you and what are the logistics of this project, what are the unique characteristics of this project, this item, before you get into this business.
So, you just mentioned that forming a LLC or whatever suits your, situation, then you also need to prepare a business plan.
Absolutely.
And then,
absolutely. Especially,
yes.
Especially if you are looking for funding, local funding, foreign funding, bank funding, the bank has to know why should we be funding you? What's the guarantee? You have to guarantee the loan, but at the same time, if somebody is giving you $100, $200, $500,000 for a new business, anybody can form the LLC in a couple of $100. Just forming the LLC does not cut it. You have to have a proper business plan around it with at least 3 years forecast, if not 5 years forecast, where you will show how much revenue you will have, what are the gross margins, what are the net profit, how would you grow the business, how would you market the business, where would you sell your product. So all this has to go in a business plan that you can submit to these angel investors, private equity investor, banks, private lenders, to see if you can find the money.
Very interesting. Now, obviously, with this thing, when you go to start a business, you're going to need permits and licenses, right? You have to have that because depends upon the product that you're going to be importing and depends upon the product that you're going to be exporting. You need to have permits and licenses.
Absolutely.
And along with permits and licenses, correct me if I'm wrong, are the insurance policies integral part of this import-export business? And if they are they really expensive?
Well, there are insurance policies around it. You can have the insurance policy for the sea, meaning while the shipment is on the sea, you can have a separate insurance policy. Typically, that insurance is bought by the supplier, not the buyer. But it could be a matter of the contract that you have with the supplier. You can have insurance policy for the warehouse. You can have the insurance policy for the item. So there are different level of insurance, but you should have some sort of, depending on the item you are selling. I mean, if you have really, really expensive item, gold, silver, jewelry, then typically the item insurance is not there. The theft insurance could kick in that case. So you may have different type of insurance depending on the item you are looking at.
Okay. All right. Now let's look into one of your favorite subjects, tax considerations and complications in import and export business.
Absolutely. I'm glad you reminded me. And we'll put a screenshot on the screen that you can all review, and we'll walk you through this screenshot.
This screenshot will have a chart, will have all these categories, and with the categories there will be an explanation for you to better understand that.
Absolutely. While we are talking about these tax consequences, tax complications for an import-export business, we talk about import tax and export tax. We talk about double taxation. We talk about tax treaty. Depending on the country you are buying this item, depending on what you are buying, depending on how you are buying. So you have to be planning it in advance when it comes to import-export business. So take about import taxes. When you're importing the taxes, the supplier is sending it to you. Is the supplier sending it to you directly to your US company, or the supplier is sending it to your foreign company, Indian company, and you have the supply coming to this company from your Indian company? Then you have to see if the supplier is charging some sort of VAT tax, some sort of local tax over there. And then depending on what you are buying, there may be some tariffs. If it's a protected item, the US government will have additional taxes, we call it tariffs, on this import of the taxes. So when we talk about import taxes, we are trying to include the foreign taxes and the tariff taxes. When we talk about the export taxes, while we are exporting it, typically we are talking about the sales tax and or the taxes that you may end up paying if you are selling the item as is to the foreign government. When it comes to the export, there are not many things that the US government exports. My favorite example when it comes to the US export is the car. When the car gets destroyed, when they try to destroy the car, they call it scrap metal. Scraps. They don't really throw the scraps in the sea. It's sent out to the third world countries, and that's how it's exported over there. So there may be a sales tax angle to it. There may be a bulk tax angle to it. There may be a foreign tax angle to it. So we will also be looking at the double taxation, especially if you have a foreign company where you have the shipment coming over there, and the foreign company is taking the charge of this shipment, and your foreign company is sending it to the US company. You may have gross margin income tax exposure to the foreign company and the US company. And why would you do that? If you're thinking about L1 visa, if you're thinking about a long-term business where you are supplying from multiple sources, where you don't have one supplier, you have a foreign company that look for example, flower business. You don't really have the farmers sending you the flowers to the US. All in the flower business, people will typically have a company in a foreign country, and then this company have one or two employees, few employees. They will go through all the farmers, find the right flowers, buy the flowers, and then this company is sending the flowers to the US company. In that case, you have the exposure for the Indian company, for the tax filing, and the US company. So that may create a double taxation exposure. You may have a tax treaty. So US government has a tax treaty with India, but US government does not have a tax treaty with a lot of Gulf countries, a lot of say Dubai, UAE. We don't have a tax treaty over there. In those cases, you may have additional tax liability over there that you have to be. So what we are trying to point out to you, so as much easy it sounds buying and selling, when it comes to import export, the margins can be very high. The profits can be huge, and so is the complexity. So are the rules, regulation, compliance, taxes. So it's not as easy. We want you to understand, and we want you to plan it ahead. We want you to think it through when it comes to import-export business, so you know what you're walking in.
All right, and then obviously I just have one or two questions. When it comes to all these, tax complication and considered matter, what about tax planning? Now for the tax planning, quickly, Ajay, does your personal income tax status or your income come into effect? That how should you be planning taxes for your business, whether it's LLC, C Corp, S Corp?
Absolutely, great question. So depending on how much other income you have, not just this business, other income you have, your tax liability may be different, especially for LLC, S Corp, or flow through entity, we call it. If you are making $100 through this import-export business, do you pay $10 or do you pay $37 on these taxes? Depend on other income you have. So a lot of tax planning is very, very case sensitive. You don't want to be saying that guy is making $10, so I can make $10. That guy's situation may be different, your situation is slightly different. So let's put the numbers together. When it comes to tax planning, everybody is different.
All right, and the last thing is non-compliance, or rather risk of non-compliance.
Well, as we discussed in the first segment, we have a lot of tariff issues, a lot of legal issues. If you are trying to sell a food item or food substitute and it's not FDA approved, if you are claiming something that's not what you are selling or what the item is there for, say for example pan masalas, they are pushed into tobacco category over here. There are no regulation on pan masala sale in India over here unless you have a tobacco license, a special license, and you do monthly filing. You can't sell pan masala. So you have to be concerned about a lot of these rules and regulation, legal compliances, because the exposure is too high. We live in a country that's extremely litigious country.
Very good. And the last question, how do you think, how competitive is this business?
Well, it's not as bad yet. It's getting there just because people see a lot of margins over there. People see easy money. A lot of dollar stores buy everything by shipload from China, India, and then sell it for $1, $5, or $10, whatever we call, whatever the type of store you have. And these items are pretty cheap to get from foreign countries. So the competition is increasing day by day, and so is the compliance, so is the complexity. More we see that more people are doing it, abusing the laws, abusing the rules, more compliance will kick in the picture. More cases you will see, more legal claims you will see. So it's a good business, but make sure you understand what you're walking in.
All right, with that, amazing information about import and export. Viewers, hope that you've gotten enough information. And once again, the show is brought to you by Science CPA Services. In the end, I just want to point out one thing. We're in month of August. Time goes fast. Before we know, December is going to be here. And one of the most important things that you should be doing right now is look at your current year's income, where you're going to be ending up by December 31st, and see where you can invest some money in order to save your taxes. It's a win-win situation for you because you're going to invest in one of the plans which will help you to reduce your tax liability. And Science CPA Services and their experienced and knowledgeable staff can definitely help you out, but you must start doing it now because time goes fast. You can't do it after December, and sometimes you can't even do it in the middle of December. So start doing it now. Look into it. Science CPA Services can definitely assist you. With that note, Ajay, thank you so very much for your time. Thank you for all the information in import-export business. I am Sanjeev Pandya, wishing you all happy days ahead. Until we meet again, take care of yourself. So long.
Thank you.